Well, hello everyone and welcome to Momentum Finance channel. In this video, we're going to be talking about two undervalued industrial sector dividend stocks with very safe dividends that you can consider to buy or watch right now in the stock market. The first company to review is called Msc Industrial, with ticker symbol MSM, traded on New York Stock Exchange. Msc Industrial roots its trace back to 1941 when founder 𝗖𝐋𝐈𝐖𝐊 began selling cutting tools from the trunk of his car. Today, Msc is one of the largest North American distributors of metalworking and maintenance, repair and operations products, and the company works with thousands of suppliers to source around 2 million different products such as cutting tools, measuring instruments, fasteners, janitorial suppliers, and power tools. Msc also provides inventory management and other services. The company actually does pay a dividend currently with the yield of 3.57%, and it's considered to be a very safe dividend according to Simply Safe Dividends. What's more, the stock itself is not as volatile as the general stock market, given the fact that they have a beta or volatility score of only 0.87. A beta score of under 1 suggests that the stock is less volatile than the general stock market. From a market capitalization perspective, Msc Industrial is considered to be mid-cap with a capitalization of $4.64 billion, and the last trading price for the stock was $84.03. Looking at the key metrics for Msc Industrials from a dividend payment history, you notice that the company has currently a payout ratio of 65%. Ideally, we would like to see somewhat closer to 60% or lower, but it is at this stage, the way it is at par with what typically for industrials, the type of companies they have. It's a little bit edging higher for most companies, but it's still at an acceptable level. What's more though, forward payout ratio for the company is only at 57%, which is low for most companies of this type. When looking at how the company has responded during the recession, the last recession that we had between 2007 and 2009, during that time, they did not stop paying their dividend. In fact, they increased their dividend amount even during that time. They have been increasing their dividend payment for the past 17 years. Their sales during that recession actually was down by 18.8, which was below average the growth for during the 2007-2009. But from a recession return for the stock price, it was down by about 44%, which was better than S&P 500 during that recession, which was down by 55%. So although it was down, but it was not as bad as what you would have got by just investing in S&P 500 as a whole. Looking forward, we're going to take a look at the payment schedule for dividends for the company. You notice here that they do pay their dividends on a quarterly basis in the month of January, April, July, and November. Currently, the annual payout per share in terms of dividend is $3 per share. The graph at the top also shows you the history of and the track record of the dividend payment over the past years. You notice the company actually started paying uninterrupted dividends since 17 years ago, and each year since then they have increased their dividend year after year. From a valuation perspective, the Msc Industrials with ticker symbol MSM, they have a current dividend yield of 3.57, which is 16% above its 5-year average of 3.09%. This could indicate that now could be a reasonable time to invest unless you believe that the company's outlook has weakened. In addition, their forward price to earnings ratio of 15.9 is about in line with the company's own 5-year average of 16.2. And when you compare that to that of industrials, the forward price to earnings ratio of 20.8, MSC is at a better rate. Ideally, it's nice to see that their forward price to earnings ratio is lower than that of the sector, suggesting that the stock could be actually trading at a better multiple when it comes to comparing to that of its sector. Looking at the price range, the 52-week or 1-year price range for the stock, the lowest price in the past 1 year has been at $60.65, and the highest price for the stock has been at $95.62. If we look at a number of other financial metrics, for example, if we want to take a look at the company's sales, you notice how the company has gradually increased their sales over the past 10 years. There are some years that they have done better. For example, 2019, they had the highest sales over the past 10 years. But in the last 12 months, we are seeing that they are showing 3.16 billion US dollars in sales, which is almost at par with that of 2020. When it comes to the number of outstanding shares for MSc Industrial, they are showing currently 56.1 million outstanding shares in the last 12 months. And we are seeing that nice declining trend. And it is ideal for us. We would like to see the company that actually takes advantage of buying back its own shares and giving more value to its shareholders, especially for a dividend type of company. And if we look at the graph here, it's showing you the stock price return over the past 5 years, how the stock price has been volatile up and down. The return for the past 5 years has been positive 14%. This is aside from the dividend income, the solid dividend income that you, of course, earned on the side. It's just nice to see that the stock has also resulted in some nice appreciation as well. When it comes to the stock price based on analyst estimates, according to TipRank's analyst, and 7 analysts covering the stock, there are 4 with a buy rating for the stock and 3 with a hold rating, giving the stock a moderate buy as a whole. In terms of the stock price predictions and price targets for the company, the average price target is at $102.83, and that shows an upside of 22% plus. That's a nice upside for the stock. The lowest price target by analysts is at $92, which is still higher than the current price target, the current price that the stock is being traded at, and the highest is at $115, and this is price target for a 1-year time frame. And according to Simply Wall Street, if you look here, according to valuation here, the stock and the analysts here believe the stock to be undervalued by about 5.6% with a fair valuation of $89.02. Obviously, there's difference between analysts on the two sources and channels, but it's just wanted to showcase how the analysts have different perspectives when it comes to the price target for the stock. All right. Before we continue and take a look at the second stock that we want to go over, I want to ask you for a quick favor. I've put a lot of time and effort to put this video together, and I really appreciate if you can give this video a thumbs up, and of course, subscribe to our channel. Here on Momentum Finance and Stock Investing, we post several videos every week talking about stocks, investing in the stock market, and other avenues, as well as ways to reach financial freedom. Thank you. With that, the second stock to review in the industrial sector, solid dividend payer, is a company called Lockheed Martin. This company was founded in 1912, and it is the world's largest defense contractor and supplier of fighter aircraft. Though they are best known for their F-35 Joint Strike Firefighter, Lockheed's business spans various combat aircraft, missile defense systems, military helicopters, and satellite systems. And the majority of their business actually comes from the US government, and the remainder, of course, comes from international governments. Overall, Lockheed Martin enjoys substantial competitive advantage in a highly specialized industry that solves timeless problems. And as a result of that, rivals can't easily compete with Lockheed's scale, their expansive product offering, and their entrenched relationship with government that they've already established. All of this should continue to support the firm's dividend growth and their dividend growth streak that we've been seeing. Lockheed Martin is traded on New York Stock Exchange with ticker symbol LMT. They do pay a dividend currently yielding 2.91%. Their dividend is also considered to be very safe. From a stock volatility perspective, look at that. They have a beta of 0.60, which is a lot less than like the overall beta 1, which is for the overall stock market, suggesting that stock is less volatile when it comes to its stock volatility and stock price movements. The company is considered to be large cap with $98.9 billion market capitalization. And the last trading price for Lockheed Martin was at $357.35. Moving on, if you look at the dividend, the company is having actually a payout ratio of only 40%, which is remarkable because it actually gives them a lot of room to grow their dividend in the years to come. And this payout ratio is considered to be low for most companies. When it comes to payout ratio, Ideally, the lower it is, the better. But of course, you don't want it to be too low, especially for a dividend paying company. Then that means that they're not really tapping into their funds to actually pay their dividends. The 40%, anything under 60%, probably over 20% is considered to be reasonable from our perspectives. And this definitely checks the box there. When it comes to their ability to sustain their sales during the recession, look at that. Their sales was only down by 1.2% during this recession, which is just remarkable. It's actually considered to be above average growth during the 2007-2009 recession. What's more, the stock price was down by 46%, which although it sounds horrible, it's not as bad as the overall S&P 500's stock decline of 55% as a whole. The company has been paying a dividend uninterrupted for the past 20 years, and of which 18 years of that they have been increasing their dividend year after year for the past 18 years. That's just very nice for us to see, especially for investors who are interested in dividend stocks. The company does pay its dividend on a quarterly basis in the months of March, June, September, and December, and they currently pay $10.40 per share in terms of annual payout. Moving on, looking at the valuation for Lockheed Martin, their current dividend yield of 2.91 is about 12% above their 5-year average of 2.61, indicating that the stock may be undervalued unless you believe that the company's outlook has weakened. It's also worth noticing that LMT's forward price to earnings ratio of 13.1 is well below its own 5-year average of 0.9, and the industrial sector of 20.8. An unusually low price to earnings ratio means that the investors may have become pessimistic about LMT's prospects for growth. So you have to approach that with some caution. But if you believe that the Lockheed Martin's health and long-term outlook has remained solid, then the stock could be really attractively priced at this time. Looking at the 52-week price range, the lowest price for the stock in the past 1 year has been $321.82, and the highest has been at $398.07. In terms of the number of outstanding shares, we like what you see here. The company has gradually decreased its outstanding shares. In the last 12 months, they are showing 280 million shares outstanding. In terms of the sales, we also like what we see, although it's a little bit of that drop, but since 2015 it starts to pick up, and the last 12 months they are showing $66.8 billion. Ideally, we would like to see the sales consistently growing over years. And the graph also shows us the fast 5-year stock price kind of changes and stock trading prices. And you see that over the past 5 years, the stock has gone up by 46%. This is a nice appreciation for a dividend paying company. And those dividends are just bonus, and they are not calculated in this 46% return that you're seeing here. Keep that in mind. All right, with that, let us take a look at the price targets. According to analysts on TipRanks, Lockheed Martin's 1-year price target is supposed to be at $423.13 based on analyst estimates. If that holds true, that's an upside of 18.41%. The lowest price target is at $385, which is still higher than the current trading price, and the highest is at $468 based on analyst estimates. Of the 8 analysts on TipRanks, 5 of them have a buy rating and 3 a hold rating, giving the stock a moderate buy rating at this time. And lastly, looking at the price and fair price valuation, according to Simply Wall Street, the fair value for the stock currently is at $470, and that shows a 24% measure of undervalued. So the stock is 24% undervalued according to analysts on Simply Wall Street. Well, there you have it, folks. A quick look and review of 2 very safe dividend paying companies in industrial sector that we reviewed, paying close to 3% dividend, hovering around that. We hope you found this video beneficial and gained something of value from it. If you gained something of value from this video, please don't forget to give this video a thumbs up and share it with someone who might benefit from the video as well. And of course, don't forget to subscribe to Momentum Finance channel. Here on Momentum Finance, we post every week several videos about investing and financial freedom. Thank you, and we hope to see you next time.